Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. This is the last Bazaar Morning Call this week. Tomorrow, of course, is a market holiday. I'm Prashant. With me, my colleagues Sonia and Nigel. We're coming to you from the CNBC-TV18 Motorolo Swal Studios. Guys, hi. Morning.
Hi, good morning. When you said the last Bazaar Morning Call, I got scared. I was wondering what happened. But then I realized there's a big long weekend awaiting us. But there's a nice long day before that as well.
Yeah.
And there's a day that perhaps belongs to TCS, considering that, you know, the commentary was quite concerning, given that it's, in any case, these stocks have fallen so much. So I guess that's going to be center stage today.
Absolutely, and we'll talk about TCS in a bit from now. Let me just quickly sort of begin with where we left off last night, which is, of course, the US market. So, you know, the big data point we were all waiting for was the US CPI number, the inflation number, which came in, which decelerated enough, much actually below what the consensus was expecting. But the way we left off things in the US market session is almost as if the markets were wondering what next, right? I mean, so inflation numbers have come off, but not enough to kind of signal a clear way forward. So what now? I think, you know, the S&P was lower, the NASDAQ was down, but you also had, for example, the dollar index, which sold off about 0.62%. We're closer to 101 as compared to 102 or 103. So those are the changes that we saw. After the CPI numbers, we had this FOMC minutes as well. This is the last meeting. Now, again, nothing very new. I mean, not very revealing in that sense. The one thing which I think people were disappointed with is there was no discussion. The minutes did not show that there was any discussion about rate cuts. Remember, markets are pricing in very aggressive, some 90, 100 basis points worth of Fed rate cuts in the second half of this year. In the minutes, there was nothing. There was, you know, discussion about how to plans to save banks, financial sector, but nothing on rate cuts. And I think that did not go down very well. Fed officials and regional Fed presidents did speak after the CPI number, and they acknowledged that inflation is coming off, etc. But they said that there is perhaps a long way to go before the job is done. So I think this is the mix which left markets kind of scratching their heads, wondering what next really should we watch out for. There is more data. There is always more data. There is a PPI number and a few other things which we will keep getting. Here in India, the inflation number has come off very sharply as well. So in line with expectations, it now stands at 5.6 compared to 6.4 in the month of Feb. These are year-on-year inflation changes. Much of it was largely because of the base effect, but there was also indication that the core component is also starting to decelerate a little bit. This is important because the RBI did a U-turn, a hard U-turn by not hiking rates at the last meeting. And this gives credence, this number gives more confidence that maybe when they meet next in the month of June, there will be another pause as well. Because they made it very clear, we're just pausing for this meeting and we will watch data to decide on what we want to do next. So this is good in that sense. TCS numbers are weaker than expected. But if you look at, are there sort of down rates to FY24, FY25 earnings expectations? There aren't. I mean, you know, 1%, 2%, 2.5%, these are not large. Stocks move on the back of what happens to consensus earnings expectations, and we've not seen very large earning cuts to sort of those expectations going forward. Just a quick word on the market. The Nifty has managed to close above the earlier high of 17,800. So yesterday was the 8th session that the market rose, and we've surpassed the last swing high of 17,800. The resistance is now at the 50% retracement of the entire fall from 18,887. That number stands at 17,858. That was a bit of a head spinner. 17,858, beg your pardon, that's an error. 17,858 is not very far away, just about 30, 40 odd points away from where we are. And above the 17,858 number, we could be looking at a push higher to the 18,100 level, which is the 61.8% retracement. So just two numbers, 17,858 and then 18,100, the 50% and the 61.8% retracement of the fall from the all-time highs. The 40-day exponential moving average is 17,464, and that's the support. That should be the support on the way lower. On the Bank Nifty, we've managed to close above the 50% retracement of the entire fall. The next resistance for the Bank Nifty comes in a band largely between 41,671 and 42,036. 42,036 is the 61.8% retracement of the entire fall. I mean, you know, the way the markets have come up very, very nicely in a very strong way. going into the end of the week. 8 days on a trot, the market has done very well. And of course, getting into the thick of the earnings season, we were saying this yesterday, that maybe time to take the foot off the pedal a little bit, but let the market tell you what it wants to do. Maybe it's got more steam left in it, and I think we'll find out as the day kicks off. The SGX is indicative of a 20-point flat kind of a start. Sonia.
Oh, absolutely. And I think after 8 days, we were looking for a reason for the market to perhaps pause. And maybe TCS could be that reason, right? Because the commentary was very weak and it could take the entire IT sector down with it just for today. In the near future, of course, time will tell. But it was concerning for me the way TCS spoke. Mostly the fact that, a lot of these discretionary projects are now being put on hold because of the global banking turmoil. They're saying that clients are pausing ongoing projects temporarily because of the banking issue globally. And not just that, the sentiment has weakened both in Feb as well as in March. So a lot of brokerages have scaled down their estimates as well. CLSA put out a note where they're saying that the near-term uncertainties will definitely weigh on the stock. We, of course, await more commentary from the management in a bit. But in the interim, I think the entire sector could be under pressure because of the commentary from TCS. Global markets were also subdued overnight, so no major cues coming in. The Dow was a tad bit in the red. The S&P 500 was down about 0.4%. Prashant was speaking about the local Q, which is the inflation data, which was good. And now the expectation is that the RBI is unlikely to hike rates in the month of June. For our own markets, 8 days running, the market has ended in the green. The good part is that FIs continue to buy. And yesterday there was a large FI figure. FIs bought over 1,900 crores, and this is the largest single-day FI figure that we've seen since 8th of March. So the money is coming in thick and fast. But once again, getting back to IT, you have Infosys earnings that come out later in the evening. And after what TCS has said, perhaps, a lot of these companies could be on the back foot. In any case, our poll is throwing up a constant currency growth of just 0.4%, which could be the slowest revenue growth that Infosys has seen since the COVID time, since Q1 of FY21. So in that context, there's some caution and, of course, the commentary from TCS as well. But give and take everything, this market has now, gained 5% from the lows we saw in March. It has significant gains under its belt. So maybe some pause because we're heading into a long weekend. We have big banking earnings this weekend as well. And weak earnings from TCS.
Well, if you take the lows of March, Sonia, and the high that we saw yesterday, it was a 1,000-point swing on the Nifty itself. So we've seen a big rally from the recent lows. But with regard to trade setup today, the first half of trade, well, it'll belong to the tech stocks because TCS will react and the other IT stocks as well will react. While the second half could belong to the banking names, and even Infosys will be in focus because TCS, Infosys, as well as HDFC Bank, they're going to be in focus on numbers and they have close on 20% weight on the Nifty itself. The buy on dip strategy, though, will continue till that 17,500 odd mark is violated, and it's weekly expiry that will play out. So expect a volatility as well to pick up on that front. Now, I'll say that Infosys' numbers are going to be a little bit more important than TCS. And I say that because it has far higher weightage on the index. It's on the Nifty. From the Nifty perspective, Infosys will be important. The second factor is it's been an underperformer. Just look at that chart. Year to date, Infosys, well, it's been an underperformer out there. And point number 3 is expectations are very, very subdued out there. Expecting a 0.4% growth, which is the slowest we've seen all the way since Q1 FY21. Short point is Infosys numbers are going to be important. Expectations are rather muted on that one. What are the FIs doing in the F&O market? Well, it's become quite a norm to see now. They're covering shorts and they're adding long positioning. And just in 2 weeks from the start of this series, take a look at the swing. Short positioning is down from 92%. It's come down to around 65%. The net short positions as well, just take a look at the swing out there. It's a 1 lakh contract swing. At the start of this series, they were at around 1.4 lakh contracts on net short side. That's come down to around 42,000 contracts. So what a big swing we have seen out there. Long positions have got added and short positioning has come down. On index options, yes, they're buying some puts out there, but the encouraging part is they continue writing more puts than calls. So that's a positive. And 2 strikes yesterday were in focus in an uptrending market. 17,800, 17,750 put. Between them, more than a crore shares were added out there. So let's get straight to the levels then. 17,500, 17,550. The 50 and the 200 DMA, crucial to hold that on the upside. All eyes on the 100 DMA. Can we get to that mark? And on the Nifty Bank, well, there was some writing yesterday being seen at around that 41,400 put as well. So that's giving you the near-term support for the Nifty Bank. 41,250 extremely important. And on the upside, we're looking at the 100 DMA. SGX Nifty is indicating a bit of a pullback, which will not be such a bad thing. I'm expecting this dip to get bought at some point of time.
Okay, so perhaps a pause at the start of trade and all eyes will be on the commentary that comes in from TCS. But first up, let's tell you what we have on the equity front. Sanjeev Prasad of Kotak Institutional Equities expects the markets to stay muted in the near term despite the surprise pause by the RBI and market valuations becoming more reasonable after a large time correction over the past 2 years. He notes a few headwinds like growth prospects remaining weak, inflation facing upside risks and earnings downgrade risks exist, especially in the consumer discretionary and outsourcing sectors. In his view, bottom-up valuations do not price potential risks adequately in the case of more sectors.
Money market views. Parul Mithal Sinha, Standard Chartered, says USD INR is traded in a narrow range as the impact of dollar weakness and range-bound oil prices was offset by US dollar purchases by PSU banks. She expects the pair to trade in a range of between 81.7 to 82.3 for the week, post lower than expected CPI print out of the US.
And on the bonds, Parul Mithal Sinha says domestic yields moved lower last week post the surprise pause by the MPC. She says with lower than expected inflation reading from the US and India, she sees a sustained rally in bonds with the 10-year bond yield likely to trade in a range of 7.1 to 7.2% for the week. She says while their research team still expects terminal rate hikes by the FOMC, the India MPC is likely to stay on a prolonged pause on rates.
Well, we've given you the money as well as the equity market calls, but let's get a little bit micro and tell you the stocks that we're going to be focusing in our special top 10 segment. We're looking at AU Small Finance Bank, SRF, RVNL, Campus Activewear, ONGC and Oil India. Their stocks on the back of positive news flow. On the flip side, you have TCS, Lupin, Anand Rathi Wealth and Asian Paints. All of them will be reacting to negative news flow.
Okay, TCS, of course, will be the top stock on our radar. We'll take a quick break. On the other side of the break, we'll also talk about the global markets. Dean Kim, the head of Global Research Product.
Okay, welcome back. With us here on Bazaar Morning Call, Dean Kim, head of Global Research Product at William O'Neill and Companies, joining us to take some questions. Dean, good to have you with us here. Thanks very much. What next for for equity markets, Dean? We've had a pretty nice move here in India, a powerful 8-day move, and in the US as well. Although in the US, it's been pretty clear that we are bumping into resistances on the S&P, especially around the 4,100, 4,120 odd levels.
Yeah, so today was all about the CPI, which came in cooler than expected, but the print was not convincingly low enough to really boost the market. And while food and energy prices came down, inflation related to housing continues to be stubborn by edging up 50 basis points month over month. But the slope is coming down, so we will likely see this portion of the CPI going negative fairly soon. And coincidentally, the Fed released the March FOMC meeting minutes, and they do expect the U.S. economy to head into recession by the end of this year. This is really no surprise given the fallout of the banking sector and the tight liquidity situation that we are in now. But the overall market hung in there quite well today, with both S&P and NASDAQ keeping well above key moving averages. And in terms of the resistance levels on the S&P, we're looking at February high of about 4192. NASDAQ as well, we're looking at February high of 12,262. So those are the levels that we're keeping an eye on. But until then, I think we have to wait and see what happens with the data that as we go forward, in terms of the future releases. Breadth-wise in the market, we're making some improvements. We're currently at 45% of New York Stock Exchange trading above the 150-day moving average, whereas this was only 30% back in March. So making some progress, but there are some uncertainties going forward for sure.
Okay, thanks a lot for joining in though on the show, Dean. Let's quickly run through some of the big numbers to watch. So TCS as a stock is something that everyone's going to be tracking today, given that the numbers have been weak and the commentary from the management has been quite cautious. How do you see the charts now? Do you think that there is more downside for technology companies in the Indian market?
I think they're kind of range bound at the moment. Both TCS and Infosys currently trading in a flat base. They do have some work to do. I think TCS, is doing slightly better because they are running up against 200-day moving average. But stocks like Infosys trading at the bottom end of the range in terms of the flat base. So definitely they have some work to do. What I'm wondering about though is in terms of the future outlook, they do, especially Infosys does a lot of work outside of India, particularly in the U.S. And if companies are going to be heading into sort of a slowdown, I'm wondering, if that's going to create a tailwind or headwinds. But we rely on the charts, and for now, I think they're fine. They're trading in a base, but let's see if they can get over the 200-day moving average first.
All right, Dean, final question before we let you go. Then, in terms of preference, I recall last time we chatted, you were talking about the Korean market as well as the Hong Kong market. Where does India feature in that list, if you could tell us? And also, what are the levels you're looking at on the Nifty from here on?
So basically, we re-rated Indian market on at the end of March. Actually, the day I spoke here last, we had a follow-through day, and the market had a nice move. Basically, it's running up against a bit of a resistance at the 100-day moving average on the sensex. So we have to, hopefully get over this level. That would be great if we can do that. But we may see some resistance here and sort of, trade between 100-day moving average and 200-day moving average. But if we can bust through the 100-day moving average, that would be a huge sign, given the fact that, we had a follow-through day recently. So that would be great. Now, in terms of, relative to other Asian markets, Hong Kong is in an uptrend, Korea is an uptrend, Taiwan as well, and then India followed. So, it's a great setup because, globally, we're entering a sort of tail end of tightening by various governments around the world. And we're about to head into reflationary period. So usually it's the emerging markets that come out, out of the gate first. So so this is good to see. Yeah.
All right, Dean, we'll let you go on that note. Thanks a lot for joining in and speaking to CNBC TV18. Let's slip into a quick break. Lots of stocks to talk about. Of course, TCS will top the charts. We'll connect with the TCS management about their Q4 earnings, what went wrong this time around, and why the demand trends are looking like they could be weaker from here on. More on that coming up in a bit.
Is your strategy ambitious enough to drive transformation at scale? How can you design and deliver a strategy fit for the real world? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Reframe your future with EY.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
कैसे करते हैं ट्रेड? ट्राई 5 पैसा। ऑर्डर छोटा हो या बड़ा या कार्ट में पड़ा, कोई वैल्यू या सेगमेंट या कोई भी टाइप, ब्रोकरेज को लेकर अब नो मोर हाई। और सुन, 2 लाख के स्टॉक्स या 2000, इन्वेस्ट मर्जी से करो यार। ना लगे कैलकुलेटर, ना लगेगा पेन, अल्ट्रा ट्रेडर पैक से होगा ब्रोकरेज सिर्फ ₹10। कमीशन की टेंशन छोड़ो, 5 पैसा से रिश्ता जोड़ो। With 5 पैसा's Ultra Trader Pack, brokerage होगी सिर्फ ₹10 flat. Beat that. ऐसे करते हैं ट्रेड। सोच मत छोटे, इंस्टॉल मार। Investment in securities market are subject to market risk. Read all related documents carefully before investing.
I am heat.
Blue Star Inverter AC with fast cool technology. Bye-bye heat. Blue Star.
We protect you anywhere, everywhere. Family Health Optima Insurance Plan. Star Health Insurance. Always at your doorstep.
Well, lots of big numbers to watch today, but TCS will be front and center. We're awaiting management commentary as well. Rima's joining in to give us a fine print of the numbers this time around. Rima, not looking so good?
No, there is a miss on revenues and margins for TCS. So TCS constant currency revenue growth at 0.6% quarter-on-quarter is lower than consensus expectations. EBIT margins at 24.5% misses the company's guidance of 25%, and the key reason is the sentiment turn in the month of February as well as March. Discretionary projects were put on hold, as a result of which the revenue growth as anticipated did not play out. And the concern from the management commentary, according to analysts, is that the management commentary is not offering comfort on near-term or the FY24 demand environment. BFSI growth has also slowed down to 9.1%. The good part in the numbers is the strong order book, or the order wins at $10 billion is sharply higher compared to $7.8 billion the prior quarter. Infosys ADR was down 2%, and that can give us an indication of what the setup could be for Indian IT this morning following TCS's numbers. Back to you.
Okay, all right, and we'll have the management, in the next few minutes as well. That'll be joining us, and Rima will be speaking to them. Well, let's move on to the other stocks then, all that are in focus. Sonal joins us to run us through that list. Hey, Sonal, morning.
Hey, morning, Nigel. Like 4 stocks on my radar now. AU Small Finance Bank, because it's good news for the company, where they have received an approval from the RBI for Mr. Sanjay Agrawal to continue as Managing Director and CEO. It is a reappointment that has come by, and Uttam Tibrewal will be the whole-time director. So these reappointments definitely are positive for the stock. SRF, where their pharma project has been commissioned and capitalized. They had announced it earlier. Now it has been commissioned. The aggregate cost here was around 223 crore rupees. For RVNL, it is another order that the company has won. It is a letter of award from Northwestern Railway. 63 crore rupees is the order amount. Campus Activewear, they have acquired land and building from Marico Industries in one of the regions, and this is to expand their existing capacity for manufacturing of semi-finished goods and assembly of footwear as well. And the total cost here is 16.5 crore rupees. Lastly, Lupin, because CNBC-TV18 has accessed Form 483 for Lupin's Pithampur plant. Remember, it was inspected from 21st March to 29th March, and the plant was issued 10 observations, where US FDA said that 4 out of 10 observations are repeat observations, and investigations of failure of a batch did not extend to other products, and there are more details to that. But yes, on the back of that, Lupin will be in focus today.
Thanks a lot for that. Well, Anand Rathi Wealth also came out with its Q4 review, so let's take a quick look at how it panned out. Surbhi is here with more. Surbhi, over to you.
Thanks for that. So Anand Rathi reported its Q4 numbers, and the numbers don't look so good. On a sequential basis, the revenue was just up 4% and at 143 crores. EBITDA is down 1%, and margins also are lower by 1% at 43%. PAT is constant at 43 crores. The company missed its AUM guidance by 2,000 crores, and this is after they revised it upwards in Jan of 2023. The net client additions were down for the second consecutive quarter. The active client families was up 2%, with a client base of now 8,352 families. For FY24, they have guided an AUM of 47,000 crores, a revenue of 661 crores, and a PAT of 205 crores, all of which is a close to 20% growth over its FY23 numbers.
Okay, thanks a lot for that. So that is on Anand Rathi Wealth. Of course, we'll also be talking about the commodity market and what's been happening there. Manisha Gupta is joining in. Manisha, what's the latest on crude?
Well, we are trading at 5-month highs in case of the crude oil prices. We've seen 2% of gains in the overnight market, and the latest trigger clearly comes in from the U.S. inflation data, which is continued to ease lower, with an expectation that a 25 basis point of a rate hike max is what we will see in this year. The decline in U.S. dollar also is supportive, and then the markets are looking at the OPEC-led output cuts. The Russian output for the month of April also has seen a decline. This is a voluntary cut that they have come out with, and the markets are anticipating a tightness in the second half of this year is the reason we've seen support coming in. So $87 is back, and that clearly has been the high for this year as well. So until now, for this year, the range for crude prices has been nearly 70 on the lower side to 88 on the higher side.
Okay, Manisha, thanks a lot for that. Well, of course, the street will be awaiting what the management commentary comes in from TCS. So in just moments from now, we'll cut across to the management speaking to our team. Remember, so far, they've said that the sentiment has weakened in the month of February and March. A lot of discretionary projects have been put on hold. Let's cut across. In fact, Lata and Rima are in conversation with the TCS management. Over to you guys.
Thank you. Yes, the top brass of TCS is with us, Kritivasan, Rajesh and NGS. to tell us how bad is the situation out there and whether things can improve sooner rather than later. Gentlemen, thank you very much. You have put a bit of a fear of God into everyone who's tracking the IT sector. So Rajesh, let me start with you on that. The deal win is excellent, but that's not showing up in the revenue. Is it deferral? Is it cancellation? Why is this discrepancy?
Good morning, Lata, and great to be here. So, I like the way you started it. I mean, why is it so bad? It is not that bad. So we are still about 100 million.
These are the expectations.
Yeah, exactly. So on an actual sequential basis, we have more than $100 million in revenue growth, which is the size of a small company. And what we are talking about is what is the visibility. And as we had shared with you at the beginning of last, or at the end of last quarter, beginning of the year, we had expected that North America caution is likely to dissipate at the beginning of the year, and we are likely to see a fairly strong bounce back. That has not materialized, and initially, because of lingering fears of what's likely to come, and later part of the quarter, because of the uncertainty that came around the BFSI sector and its implications on the overall macroeconomic setup. That's where the miss in terms of what we were expecting versus what North America has been growing very strongly for us. If you look over the last 8 quarters, for the first time in a long time after the pandemic, we have actually had a sequential degrowth in North America, which was totally unexpected and caught us by surprise. As I said, the signs of a slowdown were there, but we were anticipating a bounce back. That did not come through. Now, what does that imply? I think the deal win actually is an indication of the underlying demand for the transformation agenda, for the technology agenda. It's also a ratification of the relevance of what we are offering, our services, our ability to engage with customers and with the market. And that gives us confidence in the overall trajectory of what we have been talking about from a medium-term demand side. The short term will need to be tweaked based on what's going on, and our approach to it is to stay agile, stay close to the customers, and we'll deal it on a kind of a week-to-week, month-to-month basis till some clarity comes around as to what to expect.
Okay, I'm trying to get a little more clarity from Kritivasan in that case. Kriti, the problem seems to be in BFSI because of the problem in the US regional banks. Now, the worry is, can it get worse before it gets better? What is your total exposure to regional banks and to bank like UBS and Credit Suisse at all?
Our exposure to US regional banks is very, very immaterial. Okay. In an overall scheme of things, I would say on a revenue basis, it could be less than about 3% of our revenue. It's very immaterial. We own just 3% among banking alone, right?
So no danger of things getting worse before they get better, like another quarter of lower earnings before, or another couple of quarters?
I don't want to give any guidance on immediate quarters, but this is my personal view. Like overall, I'm sure the government, US government also would be concerned about the banking sector, and they would come in, like they came in to support FCB a little later. I'm sure there is a general confidence among the public. The government will not allow any more bank to fail, and so in that respect we don't expect any failure. But like Rajesh said, the uncertainty is still lingering and it will be there for some time. So customers are likely to prioritize certain kind of projects over others, like cost cutting projects or
defer, not cancel.
Defer, right? That's what I said, prioritization. Like our thesis is like technology spend is quite resilient, and customers need that to remain competitive in the marketplace. So they cannot say that I will not do these kind of projects. They have to do those projects. They may defer it.
Rajesh, you said the degrowth in North America took you by surprise. What was the growth that you were anticipating this quarter at the beginning of the quarter?
So personally, I wanted to do 28 billion for the year. So that's another about 70, 80 billion.
But approximately, right?
But jokes aside, that would also bring it approximately. So we were thinking that the quarter should come in at somewhere in the 1.5% to 2% range.
Okay.
That would have also met the other side of it. It has come in at 0.6. So that's the extent of the miss. And almost entirely, I would say that I would think North America is where the shift is. So that's pretty much the story of the quarter.
NGS discretionary projects have been put on hold. Across which sectors? In BFSI, Kriti, please add to that. In BFSI, which pockets? And was there a spillover into other verticals as well, where discretionary projects were on hold?
There have been spillover into a few other verticals. I think largely in the manufacturing and auto sectors. Banking, financial services is one, we have seen some caution in terms of saying that, look, let's spend wisely, right? There are something going on. Let's take a step back. Let's not cancel anything big, right? But then let's spend wisely, see how we want to manage the budget for the year moving forward, right? But at least the customers whom we spoke to, we haven't spoken to all of them, but a few of them whom we have spoken, they said, look, budgets are largely intact, they're all signed off, right? But then, we will spend wisely and we will be cautious for, let's say, a few weeks and then take a call on what we will do, what we will accelerate, what we will probably retard a bit. Right?
Okay, if that is the case, and which is the theme I'm getting from all of you, there should be some pent-up execution that will come in FY24, since you are all talking about deferrals and thinking. Should we expect an extraordinary effort or extraordinary showing financially in some quarter this year?
I said that yesterday also in the press conference, that US reacts fast. So it reacts fast on the downside, and it will react fast on the upside also. So if this current uncertainty goes away, it will be reasonable to expect a significant pop at the later part of the year. But we need to see how this develops. And again, as I said, we have stayed away from predictions from economists, etc. and all. And you are much more knowledgeable about it.
Don't pull my leg.
So, but what will happen as the rate cycle increases? How will this transmit through the system? All of that has to be seen. I think the most important part is you look at the business per se. This growth is what is the uncertain area. But from our own operational stance, this is not something that is significantly worrying. So we need to do some repair work in US in our overall delivery structure. And this is a good time for us to execute on that. We have been overly dependent on contingent labor, given the supply side disruptions that happened and the travel restrictions that were there. So we need to fix that, and that those things need to take time to get it done. We are well on our way to do that. From our peak, we are down by about 25% on the contingent labor side. We easily have another 25 to 30-40% more to be reduced to bring it down to where we would be comfortable with. So we will continue executing on that. We have a little transition to do, so that he's getting some free time on that. So there are enough things to be done during this period, and balance sheet is clean, so we don't need to worry about that per se. That how does it impact us? So it's a good time for us to consolidate, and we are very well positioned to participate in the upturn. And towards that earlier question about the deal wins, that also shows the relevance of what we are doing. So, we are resonating very strongly with our clients, both transformation agendas as well as their cost optimization agendas. So, whenever that bounce back comes, we will be much significant participants in those initiatives also. So, from an operating company perspective, it's not from a market perspective, which needs to price it, and especially from a market participant who needs to take a call on the more 3-6 month kind of a time frame, that's a different perspective. Structurally, we are on a very good wicket, and this is just one of those phases that needs to be taken through.
Seen through. I'm sure we want to take a lot of questions on what's the new theme or what's new that Kriti will bring to the table. But before that, I wanted to ask NGS, one of the answers in the press conference was very interesting. You said all conversations start with ChatGPT. I just wanted to know how will that impact the gush that you're seeing in ChatGPT and generally in AI and ML. Is this margin crunching? Will it mean more investments for you? Or does it open a vista of new opportunities? Is it positive or negative?
I think it'll open a vista of new opportunities, number one. I think it's going to accelerate the technology adoption, things will become extreme agile in terms of our own ability to deliver and customers' ability to absorb these technologies. Both sides, I think it will be extreme agile as I see it.
Okay.
And I think like any other technology, it will go through its maturity phase, but it's a very, very promising development in the field of artificial intelligence and machine learning.
Kriti, just two quick questions
Sure.
on BFSI. The exposure to US regional banks is less than 3% of your BFSI book, but you do work for Credit Suisse and UBS.
That's right.
Has there been any impact?
No impact as of the last quarter.
Okay.
But if you ask me, like, would there be an impact? Yes, there would be some amount. Some projects as Credit Suisse gets merged and the integration process starts on. Some of the discretionary work they are doing, they may defer or they may rethink on whether the discretionary work is any more valid, right? Like is required. So that could be
cancellations.
There could be some cancellation of discretionary work, but there, I see it's very easy to assume there
So
would be
how
some.
big is CS and UBS? Can you give us a number
Is it
combined?
like 1%, 2%?
I don't think I want to give a number at a specific account level if I have not given to you before. I don't think it's appropriate for me to start a new practice. No.
And just to understand how widespread the problem in BFSI is, what percentage of your clients, would you say a majority of your BFSI clients have put their discretionary projects on hold, or is it less than that? Any range?
See, it's not that all discretionary projects are put on hold. Okay, like those projects where they think the ROI is going to take long.
Yes.
Okay, those projects get put on hold. But if somebody would you call cloud a discretionary project or a non-discretionary project? Like we keep signing cloud deals even now, and cloud deals keep going on. So there are each banks or institutions, individual situations vary. It depends on where they think there is an immediate opportunity. And
So just to spin it in another way, how many BFSI clients have put projects on hold? And how many clients?
there would be a significant number of them. But it's not that. Again, I just want to I want to ensure the message is right. It's not all projects get on hold. Every client, there will be few projects they may want to defer here and there. So it's not that it's a widespread contagion that we are looking at. It is there are cancellations across the board. I'm sorry, I will correct myself. Yes. There are deferrals across the board.
Okay, now Rajesh, one of the factors that you all mentioned in your press conference is that the offshore labor was expensive, and it is. I mean, one can see even from the unemployment numbers in the US, there are 2 jobs for every 1 person. Here, attrition is going down in India. If one assumes that because of the rate hikes, the job scene in the US gets a little easier, the wage inflation recedes. It has to. That's the way the policy is headed, and attrition is down here. Is your dream margin within reach? I mean, you missed that 25% exit this time, but is it round the corner?
So there are enough tailwinds, what you said, both on offshore as well as on-site. There are good tailwinds. There are headwinds also. From a headwind perspective, return to normalization, we are still running at less than half of our typical travel cost. We do hope that it will not go back to its peak from a percentage of revenue perspective, but it will increase. Other elements of our capacity also, we need to see how the return to office environment plays out. So there are headwinds, but there are tailwinds also, which gives us confidence that the margin trajectory should definitely be positive. Now, what is that number? That is in good hands now, so you can grill him.
So is the delta immediately up? Is 24.5 the bottom? For the reasons I'm saying, or even
see, again, like Rajesh mentioned, we have good tailwind. Like as attrition goes down, in fact, yesterday Samir was explaining, like he was talking about. If you can call it a cost of attrition, he was putting about, about 140 bips or something. So that's a tailwind available to us. It's not that attrition is going to come down to the previous level immediately. Over a period of time it comes, so the tailwind is available to us. And we need to control the headwinds in terms of additional costs. Then if you ask me, I won't say it's immediately possible, but it's definitely we can have a shot at it.
Okay. Well, I must ask you this before they tell us that our time is up. What are you going to do new?
I'm not going to anything new. See, all of us have been here for, in TCS, if somebody is 20 years, we call them a new kid in the block, right? So all of us have been here for so long, and whatever we've been doing it together. So it doesn't mean, so just because there's a CEO change, as I was explaining before, it need not mean there's a strategy or structure change. We'll go through things like whatever is required, we will do. I don't expect anything new.
When are you appointing the new BFSI head?
Due course of time.
But if he's not doing anything new, if it's going to be business as usual, why are you going at all, Rajesh?
Is he going because he wants to do something new, or?
No, I mean, if no change was merited, then why call it
a wide world? Let's look outside a bit.
Okay.
NGS, can you talk a bit about this order book? The question is, if your order book is so strong, $10 billion in Q4, $34 billion for the year gone by, shouldn't you set you up for good growth next year?
Absolutely.
But yet, it should. But yet there is so much uncertainty.
No, it's a question of, executing well on that. And second thing is that what makes us feel confident is the fact that it's not lumpy deals that constitute this $10 billion. It's a very, very homogeneous and heterogeneous, the way they look at it, across geographies, across verticals, and in the range of 50 to 100 million, right, kind of deals, right? Large number of them, right? In Europe especially, I think we have closed the number of deals, and the total value of the deals that we have closed in this quarter is more than what we closed actually in the previous 3 quarters, right? So which means that, look, Europe, as we called out last quarter, I think some green shoots are emerging, and I think that's shaping up, right? So if I look back and see that, look, okay, what we accomplished in the last year, and compare how we handled the 2008 financial crisis situation, where we are today, what kind of deals that we have, I think we should be able to execute this well, and we should be able to grow from here.
Clients have signed the dotted line on deals. The only risk is they say that we're not going to do the deal on 15th of April, we're going to do it on 15th of September, right? They push,
absolutely.
Push it back.
We have not experienced cancellations. Yes, we have experienced certain deferment because, as I said earlier, let's spend wisely, let's not be stupid, take a step back. There are a lot of noise around, but as Kriti said, the government was quick to step in. Even in the case of Switzerland, the government really stepped in and provided a lot more guarantees than what we normally see in this kind of situation. So UBS CS is in a hurry to get things done, but they have enough time, right? The way I put it, right? So it's not something that we have to see that, look, cancellations or rationalization of that spend between the two organizations is going to happen quickly, right?
I'm going to disobey your team and my team and squeeze in one more question. They're warning me that the time is up. Rajesh, just finally, is the big problem that TCS faces its sheer size? I mean, 615,000, twice the size of what Indian Railways, steering that ship will mean slower growth?
Not necessarily. I mean, if you look at competitors that are larger than us, they're doing well. So I don't think that is based on it. TCS has to play its game. And we are on a multi-year transformation journey, and that needs to be executed well. Our starting point is different, our strengths are different, and with our size, our value creation is also very different. The business model is different. So we need to find our path, and we laid out that pathway to 50 billion. I still believe that that's the guiding pathway, and towards doing that, there are many things that we need to do incrementally. And so we need to watch out for growth. There is a minimum level of growth that is required in our business to make sure that it stays healthy. But beyond that, I think as I said in the past, the strategic agenda is much more broader, and we need to execute on all of that. So size is actually a big asset towards that. The reason many of the customers, the kind of deals that they're seeing, they love the fact that we have the full portfolio. They love the fact that we have stability. They like the fact of the company's philosophy and the way we approach it. And we are still scratching the surface in terms of the kind of relationships that we can have, both number of relationships as well as the depth of the relationships. So
Thank you, Rajesh, Kriti and NGS. And I'm going to take a rain check from both of you, an exit interview and an entry interview before you sign off, Rajesh.
Thank you.
Let me hand it over to the studios, and in a bit we will have Samir and Milind joining us. Dominates Mindspace today, and for some time now, the IT sector, IT investors haven't exactly got a relief from the numbers. So to pour more into the finances and the human resources, we have the heads of those verticals, Samir and Milind, with us. Well, Samir, let me straight away get to brass tacks. This is what I've been trying to prod with even the analysts. Can we expect an improvement in margins like round the corner simply because attrition is going down and labor can't get more expensive in the US because of the tightening measures? So how soon can we expect that turnaround?
So we have structurally worked towards it through the last year, and that should continue. So if you looked at it, we in the peak of supply side challenges, we invested in capacity at scale, and we brought in fresh talent, trained them on newer technologies, and built a talent pool. In the recent months, we have ensured that the attrition doesn't get backfilled and reduced on our lateral hiring intake. And if you see in this quarter's results, we have replaced high cost subcontractor cost with things. And these are the structural ones which we have worked towards on from its perspective. And these would be the cost levers we'll continue to focus on. We know headwinds, we have committed headwinds in terms of increments, and towards that, we will work towards looking at the measures which are available. And like it happens in each year, we'll step down in the first quarter and gradually work towards it. It has happened the same thing in FY23 as well, where we out of turn guided you towards it, and we were pretty much happy in terms of how we achieved it, except for the Q4. We were dot on in terms of what we thought about.
Let me just push that to you as well, Milind, since you would be doing the actual hiring. Are you satisfied, or are you confident that the worst of wage inflation is behind you in on-site?
I believe so, yes. I believe so. Overall, in general, means in UK and Europe, we are still seeing significant wage inflation.
Not in the US.
Not in US as much because of various other reasons, but I think in general, we are okay with this, So, but things will stabilize even further, I believe.
Samir, you spoke about the cost levers, right, to bring in operational tightness. One, reduce the lateral hires, and two, bring down the subcontracting costs. Anything else, or is it just these two that you're exercising?
No, this is what is already in play, and you can look at it. Going ahead, our primary focus, or the levers which are available, are looking at realization and productivity, which is a combination of looking at utilization, because we have invested into it and not all of it reflects immediately. Also looking at subcontractors, we used to operate in 7 to 7.5% range. We went up to 9.2. In fact, we are exiting the full year FY23 number is at 9.2. We are exiting at 8.2%, and that's an arbitrage which is available. Looking at operational efficiencies on other line items would be a structured thing which we will continue across.
What are these other line items?
The non-discretionary, the non-manpower expenses. So while our some of them will go up, there would be levers to balance it out on other line items in terms of operating efficiencies.
Okay, and when do you think you can hit the 25% margin guidance?
So I'll not get into it this time. We'd like to, given the uncertainties which are currently visible. If you look at it, what started at the beginning of the year, in the last couple of months has significantly changed. So our focus will be to take the headwinds and structurally move towards it like we do in any financial year.
I was also going to ask that question. Sometime in FY24, some quarter in FY24, we see 25 regained?
Our aspiration would be that. In fact, our aspiration would be get closer to 26 as soon as possible.
Okay. 26 is more like I want to lose weight.
Milind, 40,000 fresher hiring guidance for next year is less than what you hired in the year gone by.
No, we normally, when I tell you last year also, whenever...
No, by the end of it, you had hired a lot more,
Yes, that's right. Only thing is, if you remember, every time this time I say 40,000, for the last many years. And that is what we actually plan for.
But your hiring numbers for the last 2 quarters, Q3 and Q4, the overall headcount numbers, seem to give a suggestion that you are preparing for some slowdown in demand.
No. Actually, it is...
We've never seen an 821.
Yeah, but it is...
Net addition.
But you had never seen a 110,000 trainee hire in the past year also, right? Okay. So, if you compare those two things, that they kind of match up. We made a call there that we will actually have a significant intake last year, and we spent had a lot of investment in training this year for people, and some of those are still getting deployed. So I think that investment is what is playing up right now, and that is what is reflecting in the hiring numbers.
So what is your utilization now?
We don't give on utilization.
But approximately, is your bench optimally utilized?
But we still can do better on utilization.
You can do better on utilization.
When will the cost of delivery normalize to pre-COVID levels? It looks like growth has.
What do you specifically mean in terms of cost of delivery? The overall...
Yes, overall costs. Will they...
So if you see, it's a year of transition, as I've called out. From both sides. So post-pandemic, coupled with the supply side challenges which we face, if you look at manpower, BA expenses, that increased, and we are structurally now working towards getting aligned to the cost structures which were pre-COVID. If you look at on the other side, on the non-manpower expenses side, travel, marketing facilities to an extent were all subdued. They are also normalizing towards that. So we see convergence happening on both sides, and increasingly we would expect it, if you have to get back to our cost structures, it has to converge to the cost structures when we operated in the 26 to 28% band. And more so, if you look at it, if I take FY23 as an example, the headwinds which we had were almost 340 basis points. Okay. 160 is something which is committed in FY23 that came in. 140 was because of the supply side challenges which peaked out in Q2, and that is something, if that was not there, we are we would still have been in 25.5% range.
Okay, we are being warned that we've overshot time. Milind and Samir, thank you very much indeed for joining us. So that's the entire TCS top brass, telling us that yes, there are headwinds, but they are giving us some hope that much of it will be conquered in FY24. Back to you in the studio.